Hello everyone, welcome back to my channel. If this is your first time here, kindly subscribe. Thank you. We are learning and understanding the accounting equation today, so let's get started. The accounting equation represents the relationship between three important components: assets, liabilities, and capital or equity of a business. However, the accounting equation explains how the company's total assets are equal to the sum of its liabilities and its shareholders' equity or capital. The accounting equation is essential to the application of double entry bookkeeping, where every transaction has a dual effect on the financial statement. This is the traditional format of the accounting equation: assets equal liabilities plus equity or capital. Asset is a present economic resource controlled by the entity as a result of past events. Economic resource here refers to the right that has the potential or value to produce economic benefits. In this format, the formula shows how the assets controlled by the business have been funded, that is, through the investments from the owner's equity or capital, and by the amount owed to creditors, that is, liabilities. This format also reflects the format of the statement of financial position, that is, assets are presented first and the total asset figure balances with the total amount of equity or capital and liabilities. The accounting equation can be rearranged in several ways, one of which is making the liability the subject of the formula, that is, liabilities equals assets minus equity or capital. Liability is a present obligation to transfer an economic resource as a result of past events. This equation shows that the liabilities are equivalent to the assets minus the equity or capital, that is, the amount of liabilities is determined by the difference between assets and equity or capital. This format also shows that liabilities are assets not financed by the owner's equity or capital. It can also be in this format where equity is the subject of the formula, like this: equity or capital equals assets minus liability. Equity is the residual interest in the entity's assets after deducting all its liabilities. Capital is the total funds invested in a business, that is, it essentially represents how much the owners have invested into the business along with any accumulated retained profits or losses. So that's all on today's video. Thanks for watching this video till the end. If you found this video helpful, be sure to like, comment, and subscribe if you are yet to for more educative videos. Stay tuned for part 2, where we will dive deeper into how accounting equation impacts financial analysis and also solving some examples. Don't miss out. I appreciate every view, like, and share. Let's keep learning together. See you in the next video. Bye.